Hello, everyone, and thank you for joining us today on our last podcast of February, wrapping up our series of podcasts that we started in December to educate and provide updates to all of you, our amazing shareholders. My name is Ken Tapp, and I am the Chairman and CEO of Social Life Network. And with me today, I have Todd Markey, one of our directors, and of course, the president of MJ Link. Todd, thank you for joining me today on our last podcast before we go into our 30-day mandatory quiet period for Social Life Network.
Yeah, it's my pleasure to be with you here today, Ken, as always. And I couldn't be happier to report to shareholders that we have met and exceeded all of our internal goals that we set out to accomplish 3 months ago when we began this podcast series. We are right on track for a very aggressive year of growth in 2021. And we couldn't have reached our goals without the help and support of all of our loyal shareholders. I may say the best shareholder base in the OTC.
That's right, Todd. These are the best shareholders on the OTC. So let me share our major achievements over the past 3 months. Starting with, we have completely eliminated all of our convertible debt. And with our help, one of our licensees, MJ Link, is just about to break escrow for the very first time on their own pre-IPO Regulation A Tier 2 offering, and now intends to increase that share price to $5 a share in the next round of their pre-IPO offering. We've also aided 2 of our other licensees, Lycari and HuntPost.com, in the completion of their Form 1A filings so they too could move forward and qualify their own Regulation A Tier 2 pre-IPO offerings later this year for $75 million raises. We also identified 2 of the 3 new network companies that we will be bringing into our incubator this year that combined are expected to represent over $500 billion in their sectors. Along with those achievements, we have positioned the company to bring in revenues from our licensees for 2020 to exceed $500,000 of runway, which is enough for at least 24 months, in the unlikelihood that we would not have any additional revenues over the next 24 months. So that should make all of our shareholders quite comfortable. And on that note, we had the largest year of growth combined across all 7 of our companies that we have in our incubator, setting a new internal valuation on our licensees combined of $1.9 billion.
Yeah, Ken, those are awesome numbers. But you forgot one more accomplishment that we are nearing, and that is the qualification to re-uplist to the OTCQB. As a reminder to all of our shareholders, it was a year ago in January that our stock price had dropped below 1 cent a share, triggering the OTC to move our company from the OTCQB to the OTC Pink Sheets. However, as many of you know, we have always remained 100% current with our filings, and we have spent the past year working towards clearing out the debt, strengthening the balance sheet for 2021, and working towards positioning the company to uplist back to the OTCQB and eventually to NASDAQ down the line. Now, Ken, on that note, let's start out the podcast today with a question that we get frequently and that we have intentionally held off on answering until the last podcast series. How do we identify new niche industry companies to add into our tech incubator? And how have we as a tech incubator arrived at the internal valuations of each of our licensees?
These are actually really great questions, Todd. For those of you who are asking, we use the same 2 formulas that Silicon Valley tech incubators and venture capital firms use. Now, depending on the company that we add to our tech incubator and its market size, for instance, it can acquire an international footprint and be a really big market, or it will be in just a few countries and have a smaller market size. We use the VC method for our large marketplace companies like MJ Link, HuntPost, and LikeRE. And then we use the scorecard method for smaller market sizes like RacketStar, Cycle Fans, FootPost, and GolfLink. In total, as of February 2021, we have an internal combined valuation of all 7 networks at that $1.9 billion.
That number has to make our public market shareholders excited, Ken, especially given that the market cap for the company is just a fraction of that right now. Ken, let's talk about our first of the 2 networks that we are adding to our incubator. Race Day is a motorsports network that aims to serve as an NFT social network. For those of you not familiar with NFTs, that is a non-fungible token. In other words, a blockchain-based token social network for international motorsports industry.
Todd, currently the industry represents about $8.5 billion a year as a marketplace worldwide. But that's only for physical races and an international viewership audience of 1.7 billion. When combined with both the online and the TV broadcasting events, which in itself is a relatively significant niche industry. However, last year's social distancing measures imposed around the world gave an enormous shot in the arm of the esports sector for online racing as well. In fact, at the end of March last year, 2020, amid the first wave of social distancing and shutdown orders worldwide, an esports record was broken when 1.3 million broadcast television viewers tuned in to watch professional NASCAR drivers compete in a virtual online race on both Fox and the FS1 networks. To the broader market, it was a clear signal that life under social distancing might be accelerating the industry's expansion. And earlier that month, Verizon observed a 75% increase in video game internet traffic during peak hours, and Twitch reported a 56% viewership rise year over year at the end of 2020. These are pretty big, significant indicators that the industry is really at its very early stage. Now, an annual esports survey conducted by Foley and Lardner LLP, as well as the Esports Observer, indicates that this growing industry is still in its infant stages, and it is still dwarfed by the $159 billion online video gaming industry within which it sits. However, with that said, esports generated an estimated revenues of $950 million globally in 2020, and it's on pace to break the $1 billion industry mark for the first time in 2021.
Yeah, Ken, esports is an exciting business to be in. Let's also talk a little bit about our second newly announced network company in our tech incubator, which is SpaceZ, a space explorers and enthusiast social network that aims to connect a huge international audience of more than 1 billion people.
Yeah, Todd, this really gets me excited because I'm a super big space nerd, as you already know. I was born on the day that Apollo 13 safely landed back in 1970, and I've been passionate about space, especially recently with SpaceX, Blue Origin, and all of the other amazing space startups in the private sector over the last couple of decades. Now, the space industry is now valued at $400 billion, and it's expected to exceed $1 trillion by 2040. Now, currently, there's an estimated 1.2 billion people worldwide that represent viewers of online space-related content. Now, we do plan for this network to also be an NFT-driven platform, Todd. And as we indicated earlier, we will be doing a deeper dive on these 2 networks at the beginning of April, which will be just after their official launches that are scheduled to take place before the end of March. Now, with that said, let's go ahead and wrap up with the final podcast in our education series for these past 3 months. And I would like to say again, thank you to every one of our shareholders and all of your support. We know that we would never be able to make it this far without you, and we're honored to have all of you as shareholders in our company.
Thanks everyone as always for listening. Please stay safe, healthy, and have a great week everyone.